go through the day because I don't see anything else that looks like I would trade it. Okay, yesterday we had a bull channel, bear flag at the end of the day, and we broke out to the upside today. I don't think I put a measured move target there. I wonder. Okay, we didn't get there. Anyway, a bear reversal bar above yesterday's high, possible high of the day, and I made a mistake. I made a few mistakes today. Some days I make more than others. Today I made more than I like to make. Anyway, you got a possible high of the day, so that's a reasonable short. Good looking entry bar. Follow through. I didn't want to buy above 3 because it didn't test down to the moving average, and with the strength of 1 and 2, I think there would be too much risk of a lower high, so I wouldn't buy there. If anything, I was looking to sell. 4, big trend bar, possible sell climax. 5, I thought was an interesting bar, very large doji bar, so it probably will exert a magnetic effect, possibly for the rest of the day. In fact, just looking at the market, we may close within the range of bar 5. Now, because bar 5 is a large doji bar, you can call it a bull trend bar, but with the size of those tails, I would call it a very two-sided bar. So I'm going to call it a doji bar. It's a 1-bar trading range, and a trading range is a magnet. And prices have a hard time moving. The market has a hard time moving far from it. So I certainly don't want to be shorting near its bottom, and I don't want to be buying near its high. In fact, I want to do the opposite. So there's a bear inside bar here at 6, and there's no way I'm going to short it. The bars are large enough, so there might be enough room for a scalp. But I think the magnetic pull is a real problem for people trying to short at the bottom of a trading range. 7, decent looking bull bar after the bull body on 5. We may go up to test the top of the bar 3 area. 1 and 2 you can view as a spike, and then 5 as a climax. 4 as a climax, so it's like a spike and climax type of spike and channel, and the market could get up to the start of the channel at the 3 high. For the longs above 7, good looking entry bar. Then a doji. I think I just scalped that. And what about shorting below 9? Possible double top with the high of 5. I think we're getting too many bull bodies in here, so I think the market's probably going to get a higher low and make a move to the top of bar 3. That's what it did. Bar 10, a bull body. I could be getting a failed double top here. I thought it was an okay buy, but I personally didn't take it. Big tail down at 10 and a trading range, the bar 5 range. I thought that the market could have a big tail up on the next bar or 2. And the market went a tick above the bar 4 big bear trend bar. The market often does that when it sees huge trend bars. A lot of times it will just go 1 tick beyond the bar and then reverse. That also is the top of bar 3, which was the first attempt to set up a buy, and it's also the first pause after the 1-2 spike, so it's the start of the channel, and it's a reasonable place for a double top bear flag. The channel up, 7 and 8 spike, and then 10 through 12, 13, a little channel. The market could come down to test below 9 or below 10. I did not short because the channel is pretty steep, but after the little double bottom with 12 and 14 and the bear bar at 14, I should have gone short there for at least a scalp. Okay, does the market have more up here? We're still in that trading range, the bar 5 trading range, and we're near the top of it. We've had 3 good bars down from the double top bear flag, so I personally wouldn't buy up here. I think there's too much risk of a lower high. I said early on several times that the high or low of the day usually occur in the first hour, and at this point it looks like the high of the day is in. Usually both the high and low do not occur in the first hour, so that means the market's going to break out of one or the other, and if I had to guess at this point, I would guess it's going to break out of the low, especially since the daily chart is so overdone and it's in the area of a prior swing high, the May crash pullback. I don't like shorting below a little bull doji at the moving average, but then you get that little bear bar at 18. a little bit better, but the market may find support at the 10 low. I think it's a tough call. Market didn't care. A couple dojis down here, 2021. There's no way I'm going to buy above that. It's a high 2. It's near the low of the day. I still think the market's going to go below the low of the day. And since the low of the day is so close to the low of yesterday, I assume it's going to go below the low of yesterday. Also, that double bottom yesterday at 11 and 11.20, at the time I said looked weak. And so I think there's a good chance the market will try to go below that as well. Bear reversal bar on 22. I think it's a possible short. I did not place an order to short there because too many tails, and we're at the bottom of the bar 5 trading range area. Second entry long at 23, bull bar, but we're still in a bear channel. We had the spike 14.15 down. I would not buy it. I think arguably it's a legitimate buy. It's a second entry on the bottom of a trading range day, but I'm still concerned that the market's going to go below the double bottom from yesterday, below today's low, and below yesterday's low of the day to an outside down day. So I'm hesitant to buy until the market adequately tests all those lower targets. Okay, 2 legs up here and a bear bar at 25. That is a legitimate short setup. The risk is you got 6 or 7 or 8 bars that are largely sideways. You have that inside bar in 27 that takes away some of the urgency. Okay, another possible buy setup here, 29. It's a final flag, the flag from 20 to 26 or so. This is a possible final flag reversal, and I did not take it because we're in a bear channel, and in a bear channel, the bears are selling above the highs of the prior bar. They're not, the bulls are not buying up there. The bulls are buying below prior lows, like on a limit order below 23. They're not buying much above the highs of bars. I wouldn't short below 30, a little doji bar. Also, we're starting to get some buying near the low of the day. 23, 29, decent bull bars. 32, this was probably my biggest mistake in the past several days. I think it's an acceptable buy. 1 tick new low of the day, and it's the 3rd push down, and the other 2 pushes had good bull bars. But I think the bulls needed a good entry bar, and instead they got a small bar that basically was a double top with 30. And I held with a stop below 32, and that was a mistake. I should have either exited at the low 2 below 33, and that's usually what I do. If I'm trading counter trend and I'm not buying a higher low, and there's a low 2, I usually exit on the low 2, and if I didn't take the buy, it would be much easier to sell the low 2, which is the sensible thing to do. The market's breaking out below the wedge, so it should have a measured move down, and obviously we'll go below yesterday's low. 34 is a pretty good spike, and we're starting to get parabolic down on 36, so we could be having a climactic bottom. 37, a very strong bear bar. I think at this point, 36, sell the close. 37, sell the close. 38, a little doji bull bar. Possible low of the day. Reversal up on an outside down day. It's reversing up from yesterday's low. I personally would not buy it. Normally the first bar with a tail or the first bar with a bull body will still have one more push down, but we might not. This could be a spike and channel down. 7 is the end of the spike, and this could be the end of the channel. It's also in the area of measured moves from the earlier trading range, so this could be a bottom. So I'm not selling down here.